This is Jim with ProfitTrading.com. We're going to take a look at a few of the markets here. I'm not going to go in any particular order. I'm just going to kind of go through the charts as they come up. This live cattle, basically it looks like it's made a low. It's made a new price low on a bullish MACD divergence, and I think it's going to trade higher from here. Now again, remember, predicting the markets and trading are two different things, and right now I really don't have a trade because I like to have it trade up a little higher and put in a buy signal. Like this blue light dot square here would be a buy signal, but I look at a lot of other things too. See if I can get that down a little bit there, but this does look like a bottoms in, so again, I expect live cattle to trade higher from here, but I don't have a trade on it right now. Okay, corn's next. We had this big slam down. The gap's going to be strong resistance. Right now I think it's just making a bear flag rally, and it's going to break this trend line and head lower. The MACD's oversold, and it's in negative territory, and it is on a buy signal now, but I think that just reflects a little short-term rally here. Okay, gold is extremely oversold. So anything can happen right here with gold. I think gold's coming into a bottom. I think it's pretty close to a bottom just simply because it's so oversold. I think this big crash down was the final washout of the weak hands, and I basically think gold's at a bottom, but again, we'll just have to wait and see. And that don't mean this is the exact bottom. It could come down here in this area and it could trade a little lower, or it could just take off from here. Usually when they make this big crash down, they're going to base a little bit. So I would expect it to at least come down and test or trade sideways or something before it were to head higher. And then it could come down and make a little lower low. But anyway, I think a low is close for gold, and we'll just keep following it and see what happens. Lean hogs, looks like a head and shoulders bottom. Higher low here is bullish. I just basically think it's heading higher, and this is the KST indicator, they call this, and it's a momentum indicator. It's kind of like MACD on TNT software here. And then TNT, the bulls and bears system, is the green bars are bullish, the yellow bars are neutral, and the red bars are bearish bars. Now I do like the aggressive setting on this. This is just the traditional setting, and we're going to go through and look at it with the aggressive setting, I think, here in a second, because that gives you a little better look at maybe what might be happening. But the safer setting is the one it's on right now, and that's the one that it's the slower to turn bullish, but that's more likely to be confirm a trend. Okay, oats slammed down. It's made a counter trend rally. If you put a Fibonacci on here, the rally right now is right at 0.618. So I think oats is going to break lower from here. This is just a counter trend rally. S&P 500 broke this trend line up. MACD made a bearish divergence. Price made a new high. Lower momentum reading. The sharp bar down kind of says to me the sellers have taken control. I think a top's in for stocks. Now the S&P could just trade lower here, or it could come up and make kind of a head and shoulders top, a lower high here, and break down. So I think the S&P's heading lower, and again, we'll follow this day by day, and that could change, but that's right now that's the way it looks like to me. Soybeans are making lower highs and made that sharp move down. So this is a resistance trend line here. It's rallied up to that resistance trend line, and I think this is a bear flag, and it's going to break this trend line and break lower. So I'm expecting beans to trade lower as of tonight. Sugar looks like it's made a double bottom here. New price low on bullish momentum. I think sugar's heading higher. Dollar, not all of them. This is probably the one that I'm least, I'm least sure of, because it could go either way here, but I'm putting the odds with the downside. Again, maybe more action on Monday will change that. There's some other reasons that aren't on this chart that I think it's going to head lower, but I mean, it did find support here, so that's bullish. But I think this could just be the first move down, and then this sharp move up could just be a lower test of the high, and then it's going to head lower. So right now I'm looking for the dollar to head lower, but that can change day by day. But again, that's for tonight, this weekend, that's my best guess. Now here's the ones that's easy to call, is when they're in nice uptrends like this and all the bars are green. I mean, all you got to say is bonds are in an uptrend, and that puts the odds with the upside. So bonds are in the upside, are in an uptrend, and odds are with the upside. Wheat, this is another one. It's making lower highs. It made the sharp breakdown. It's making probably a bear flag, and then I look for it to break lower. So that's a wrap up right now. Oh, I said we would go through and change those bars. Let's go through here, and I'm going to change all these. This bulls and bears system. I'm going to try to do this real quick here. Um, let's see here. The reason I'm doing it quick is it takes a lot less time to upload it on YouTube. And I'm trying to learn how to do these videos to get them a little quicker. Um, Upload them quicker on my site and things like that, and maybe get some. I'm trying to work on the videos, let me put it that way. Okay, right now with the aggressive, this is still red on live cattle, but the thing is if we get a nice sharp up bar here, it'll turn green quicker than the regular will. So this is still saying bearish on live cattle. Corn, it's just going to be red, I can tell you already, since that's so bearish. But well, let's go ahead and do it anyway, I guess. Because I could be, I could be wrong. I think it's just going to stay the same though, no matter what setting. Just because, yeah, it's just staying red, just because it makes sense. It's a strong downtrend. Gold, that's the same thing. Those bars are just going to be red, no matter what setting you put it on. Where the bars are going to be maybe different in one setting. The regular setting, the more safe setting, is traditional. The other setting is aggressive, where it changes the bars colors a little quicker when the trend starts. And when it's a strong downtrend, the bars are just going to be the same no matter what. Now here's where the bars would be different. Like lean hogs, when it's making a base here, then it might put in a green bar a little earlier. We'll see here. This is a traditional setting. It's a little slower, but it's a little safer because it makes the market start to trend higher before it starts to turn the bars green. So sometimes you can see that it's making a bottom, but you can try to get in too early, and then it really hasn't started a trend, and then you know what it'll do. It's happened to all of us. It'll just go back right with the downtrend. So let's look at this on the aggressive. And the only reason I'm showing you this aggressive is because it might give you a little better idea of what the odds are with the next trend like this. It's drawn these bars green with lean hogs. So to me, that definitely tips the odds with the upside. But again, I haven't really got a buy signal with the other work I follow for lean hogs, so I'm close to a buy signal. Matter of fact, if we have a bullish bar Monday, I'll probably put out a buy signal in my premium newsletter. Okay, lean hogs, oats. I don't think. Well, we can try oats. I don't think oats is going to be a lot different. Some of these markets, I'm pretty sure oats is going to break lower, so that's not one. But again, you never know. Okay, oats has turned the bars green, but again, I think that just means that it's the end of an upward rally. And then if oats breaks lower, these bars will turn red real quick here. So we'll keep looking at this as much. I'll put out as many videos as I can now. I'm going to try to put out more videos because I'm working on it, and it's just something I need to do more of. Now this is going to be interesting here because I did look at this earlier. Bulls and bears have actually turned those bars red, so I think that's pretty bearish for the S&P. Now again, these tops aren't going to come in quietly. It takes tops longer to form than bottoms, so there's a good chance that we're just rolling over here, and so the next couple weeks could kind of be upward slanting bullish, or this thing could just fall out of bed here, but we'll see what happens. Soybeans, that now probably what will happen after we saw it turned the bars green on oats. That's probably what's going to happen here with beans, which to me more says it's not starting an uptrend, which the green bars say an uptrend, but to me, no, it left them all red. So to me, that's saying this is definitely bearish. And then a break of this trend line would be bearish too. So that gives us a little extra information when we look at the different settings. When you look at, let's look at that again. When you look at traditional setting, basically yellow is neutral, so that tells you don't start getting bullish yet. And we're making this little just sloppy kind of sideways upward slanting rally. It's coming right into resistance. lower high. So again, that's why I'm bearish soybeans right now. This is actually the time of year that the grains would normally be going up, but you know, if there's a big supply out there, that might not happen this year. Every year is different. Okay, sugar. Let's see here. Overlay. We go from traditional to aggressive, and that's still staying bearish for sugar. And but the thing is, again, if we have a new big sharp bar up Monday, that will turn green quicker than traditional setting. So we'll go back to the traditional setting, and that's just basically saying that, you know, neutral right now in sugar, which means it could be rolling over to bullish, which I think that's what's going on here. So these, the way I kind of look at these bars is it kind of tells you the psychology of the market. Like right here, it started turning green, and then we had this big slam down, and we had these yellow bars, and that just said that the uptrend failed. And now when we got these red bars, that means it's a strong downtrend. But then since it looks like we're coming into a low, and now all of a sudden the bar turns yellow, to me that says that it could be starting to turn into an uptrend. So the bars, these colored bars, give us a lot of information. I mean, I don't look at them just to try to say, okay, it's green, go long, it's yellow, get out. I try to look and try to see how the market psychology is played into them, because that's really what they're telling us. And then that's what they're telling us kind of in the dollar here. They're saying that it was a strong uptrend, and now it could be turning over to the downtrend, but it hasn't really turned over to a downtrend. And that's why I'm kind of iffy on the dollar, because it's kind of sideways here. So it really is a hard market to call right now. We'll put this on aggressive. And we did start a downtrend here, but now with the sharp turn, it's put in a green bar. So really, I would think this would give the tip of the hat to the upside for the dollar. But again, I'm looking at some other things that I'm bearish on. So right now, I would just be staying out of the dollar. I would be more interested on if Monday or so we put in a down bar, and then it went from green to red. Then that would be more of a trade I'd be willing to take. Right now, this green bar just still says to me this is sideways, and it's just kind of chopping around. Bonds, again, they're going to be in a green no matter what you put them in, just because of the strong uptrend. Wheat, and when I'm doing this, I'm doing this over to the left here, so you're not seeing it when I'm switching it. There's a little button that you go traditional to aggressive, and it's over to the left here, so you can't see it. But I just think it's good information to give you. That's why I'm giving you it. Again, this is kind of saying wheat is bearish because their bars are red, but it's kind of making a rally, which it is, because, you know, and that's why you're getting some green bars. But it really isn't starting a trend. And again, if this broke this trend line next week and puts in a red bar, good chance we might go short in the premium newsletter. So that's a wrap up. I hope you liked the information. Thanks for watching. This is Jim with ProfitTraining.com.